Macy's out with numbers this morning. The shares are up by 12.5% after it reported fiscal fourth quarter earnings. The retailer just missing revenue estimates, but beating on adjusted EPS. Also seeing a dip in comparable sales compared to fourth quarter 2021, but an increase versus pre-pandemic. Allie Canal listened in on the investor call. She's here with some key takeaways. So it seems like the holiday season was okay.
Holiday season was good, very strong earnings results. Those shares have been moving higher since the call. I did listen in. Here are the main things that I think you should know if you're a Macy's shareholder or just curious of the state of retail right now. Number one, Macy's very focused on building a, quote, differentiated, durable, and dependable portfolio. That's going to be driven by 5 pillars of growth, which includes refreshing its private brands, opening more off-mall stores, growing its online marketplace, expanding luxury with both Bloomingdale's and Bluemercury outperforming in the quarter, along with providing more personalized offers and communications. Second takeaway, Macy's is approaching 2023 with caution. That means more expense discipline, capital allocation, and monitoring those inventory levels, which Macy's has been very good at relative to competitors, which have seen a bit of a glut in inventory. And then finally, a big one here, the consumer remains, quote, under heightened pressure, especially amid those macro headwinds. Now, this was widely discussed on the call. Here's a bit more from Macy CEO Jeffrey Genette on the state of the consumer.
Turning to 2023, there is conflicting data regarding the U.S. consumer. As a modern department store operating from off-price to luxury, we have a full view of income tiers, aided by our high penetration of loyalty members and robust credit card portfolio. On the surface, the consumer is in better shape than 2019. Jobs and wages are strong, and savings levels are elevated relative to historic levels. But prices for services and goods are higher. Inflation has surpassed wage growth, and revolving credit is rising.
Genette added that he believes discretionary spending will be pressured this year and will shift towards more spending in services and essential goods. But he did note that gift-giving, occasion-based demand, which was very positive in the last quarter, that should continue to be strong. So overall, I give this vibe check a good rating. I think a 7 out of 10 for me. They seemed very confident in their strategy. They know 2023 will be a tough year in the consumer, but they're prepared for that. And investors are certainly rewarding them today with shares up more than 12%.
So what's been the chatter on Twitter following these results?
It's interesting. The Main Street take is that things are going to get worse, especially from an economic perspective. Very pessimistic on Main Street. In reaction to these positive results, one Twitter user writing, quote, "That's the recession effect now for the cliff drop." Now, that's not the most encouraging sentiment, but again, going to Macy's on this earnings call, they admitted that this will be a challenging time and a pressured consumer will show itself in numerous ways. We heard from CFO Adrian Mitchell, who discussed some of that impact. Here's a bit more of what he had.
We expect the consumer to continue to be under pressure in 2023. Within our portfolio, we see higher credit usage trends, slower repayment rates, and increasing bad debt levels. While not at 2019 levels, we are watching these metrics closely to get perspective on the consumer and the potential impact on credit card revenues, particularly profit share, which is the largest component of the credit revenue stream.
So credit, another very important part of this business, a possible recession indicator. So certainly something to watch with Macy's moving forward.
All right, good stuff there. Yahoo Finance's own Allie Canal with all things you need to know after the Macy's call. Thanks.